Greetings, market rebels, and welcome to this week's macro measure video combined with our sector situation video. It will be the last video of the year 2025. And speaking of which, it is about 2:26 p.m. here on the East Coast on December 26, 2025. I'm Wayne. We're getting into the Trustee Market Rebellion disclaimer there, and then this is our Trustee Market Rebellion intellectual property rights notice. Here is last week's slide with a few highlights, and I did receive a request somewhere along the line for a larger pointer. So I will try to, I don't know if this one that's kind of native to PowerPoint allows for a much larger pointer, but I did boost up the pointer overall, so we'll see if that helps out. Anyway, going back, we went with trilogy, All's Well That Ends Well, and we were just kind of waiting for the end. So despite the market's recent sort of ups and downs, we thought, okay, it looks like it's maybe ready to end well here, at least into the Christmas holiday and heading into the end of the year sessions. And so we did what on that? We said, the big question we were asking was, right, we had relatively mild corrective action, somewhat of a lackluster fall for trading compared to other parts of the year. And we said, does that set the stage for a good start to the new year? We talked about the holiday bullishness that's typically there, Santa rally, and then you get started in January with maybe more, and it sets the tone for the year. We talked about the megas shifting back to greener pastures potentially. We highlighted that Amazon, Meta, Microsoft, Nvidia, Tesla was they all looked prime, and we said that others could start to join the party, but we're not really as primed. We did say that the most likely scenario forecast would be difficult due to OPEX, which was really huge last Friday, but we noted that there was a pitchfork bottom, looked promising. We were expecting the rally to finally take firmer hold, barring news developments. Stepping back, seeing it simply, we basically said, look, we consolidated above and held the trend. And so, depending on how you want to look at it, you either have an inverted head and shoulders, you have something that looks somewhat like an ascending triangle, you're in long-term uptrends, and probably you go higher in most cases, especially as you head into a big holiday, especially as you head into the end of the year. And I think that all that typical stuff seems to have worked out with just a little more than an hour to go in this holiday abbreviated slash impacted uh, trading week, which was typical, very holiday-esque, which we'll talk about. Charts, we're still positive on balance. We're still not out of the woods because we even this week, even though it was a good one, I think to this point with just a little bit of time left, it's still not. You're still not out of the woods because you don't know if this breakout is going to sustain. We'll talk about that. We did have a higher low in place last week. We talked about the all this already here on this line, so I'll skip that. And then we said that we would expect holiday cheerfulness to aid and approach the all-time high, and the gang made that happen. And we wish everyone a safe and happy holiday season. So moving on to this week's slide, if it allows for that, that would be great. Let's see if I can get that to work. Okay. Wow, it's really fighting with me here. Sorry about that, folks. Not sure why it's doing that. Here we are, and we're going with Bulls to Bulls close to the finish line as the title of our slide, meaning with a question mark, meaning, right, are they really? Because yes, they're close to the finish line of the year and they only need a few more good sessions, but to really kind of close out, at least very close to the highs, if not make new highs. But is it really the finish line? Because jumping down to this, which we'll get to, I'm thinking that the SMH and megas have potential. Really, these megas that we'll talk about have potential right now, technically. So they all seem to be there. So let's talk about this week briefly. Good week for bulls, but still hollow at the core because it was holiday-esque. here we are. Here we go again with we have to be on guard for yet another possible pullback. We'll talk about that. We talked about this line already in the previous slide. So we basically had mild corrective action to a new all-time high, and that's what's basically happened here. Does this set the stage for a good start to the new year? I think if the stage remains as is, it does set the stage. All we have is a little bit more time, right? A little bit time next week, and that's it. And we'll be in the new year and see how that gets started. Um, we talked about the holiday bullishness last week, then Santa rally. It does seem to have started. They just need a strong push, as I said, to go from here or just hold. And then the first few sessions of the new year and January tend to matter historically. Not going into the finer points, you'll probably be able to read all about that soon from people that have the access to all the stats. The sectors in breadth are fine, but they too are holiday-esque. We did say the Bulls should take the stage, and they did. It was their time to shine, and for all intents and purposes, it was a not much of a week, but for what in terms of time and how much intraday activity there was, but it's still a good one for Bulls. I'm sure they would take a week like this every week. So difficult for the news neutral assumption, most likely scenario, which is the line we're on now. We're going to call this difficult because of 2025's penchant for making pullbacks after making new all-time highs. When you combine that recent sort of trend with the lack of overboughtness and light dubious holiday action, that makes for a pretty tough call, which we'll talk about. I mean, I try to make somewhat of a call because people really want that, but sometimes you're better off just stepping back, as we have noted here, seeing it simply, putting it simply. We consolidated, broke out, typical for uptrends, and now it's about holding above the former high, which we'll talk about. Where are we? So we're in a breakout attempt after 2 months of corrective action. Many in 2025, right, breakouts that is, lacked follow through mojo. But the megas seem prime this time, which just adds to the tough call. Where are we to? We still have the inverted head and shoulders ascending triangle in sustained uptrend. I think the vibrations are pretty good right now overall. Might not be too bullish quite yet. We'll see. And the problem with this, though, is the second year of the presidential cycle doesn't typically tend to be a good one. I think it's the worst of the four, is my recollection, but you can check that to make sure. So, maybe this is the year where if that holds true, you do a lot of DDA, discipline dictates action. You roll up aggressively when there's been a really good burst in the market, should we get one. And you don't let things happen to you like happened in ASTS the other day, which maybe I'll try to remember to talk about. Let's see. So the game plan, news neutral assumption, reiterated. I have no idea what's coming out over this weekend. But and it is a holiday influence week, but I would say start more as a bull. And I think that has to do with the lack of obedience that we've had, as of today. But I would keep my eye on the 2025, insta-fade factor, because you could still get that. There's no question about it. And I'll even make an argument as if you how you ever it's really however you want to see it. It's a tough call. That's why I'm saying it's a tough week to make a call. There isn't true mojo back in the market on the bull side, despite it being another solid week and apparently, right, just a few sessions away from the close, new all-time highs. But look, we're going to get another thin holiday week. And then, as I always remind everyone, there's charcoal swans out there that very few people seem to pay attention to. And then there's some that are just completely unknown black swans, right? So you got that as always, which again means you stick with your discipline, you just make your adjustments, and you just keep trading and doing smart things consistently, and usually that works out in the end. And then I'm just going to wish everyone a continued, happy holidays and safe holidays and travels and so on and so forth. And on that note, we're going to move on to the charts, and I'll come back to this here. We just briefly stop to share, get some stuff out of my way here, and we'll bring it back up again. Out of my way, I say. There we go. We don't need that anymore. put that over there for now. So let's share a different screen this time. I think it's the number one. Somehow they have it listed as number one. That's the screen in front of us. Okay, so this is the basic charts we look at most weeks, and I will go and take a look at SPY, and let's sort of solve the SPY. You know, what's the call? What call are you making on that right away? And the call I'm making is that, right, you're not always at a juncture where I think, let me just first say that. I don't say that enough. I probably haven't said that very many times over the course of the years of doing these videos, but you're not always at a juncture where you should be making a new fresh call. That's something, I think that is probably not said enough. You're not always where you should be on the call. So right now the call would be that you could see where that dashed line is, and you could see how that really touches these former highs, and we're above there now. And yesterday, well, I should say the prior session, we punched through and made a new all-time high. We made a new closing high. Today, we made a new high, and we're nearly unchanged. But look how far we've ran, right? We've had this kind of good run. It's not anything dramatic, but if you go from the low here to the high here, you're talking about 3.5%. And that's in just about a week and a half, right? So that's nice performance. And there's my larger cursor. Hopefully that's helping. So that's really nice performance for a week and a half. I think we would all take that, for our portfolios every week and a half. If you could get that, you would take that, assuming inflation's constantly low. But that's a bad assumption. Anyway, you get the whole point that, yeah, this has been nice. So would it be reasonable after this kind of run to say, hey, you know, there you can't rule out a long run to and through former resistance. You can't rule out a pullback for that reason. It was a relatively long run. And if you go and look at what we looked at for most of 2025, you'll see, right, that after many of these new all-time highs were made, there was a pullback period. We kept noting how this was happening quite frequently, where they just didn't burst and go. There were many, many pullbacks every time. Whenever, in other words, whenever the momentum would sort of seize up quickly after making a new one, they would put a pullback together. So we can't forget about that. At the same time, we can't forget about the long run that it took to get here, from when we said the stage was set for bulls to really try to take over. That really was set up for them, and they did follow through. So you've got to give them credit. Now it's all about them. We know this is all about end of year and patting yourself on the back and making yourself max money. The whole works that it can be. It happens all the time. It's very common. So, but anyway, but you're not really overbought. I mean, if I look at the RSI on the daily SPY, it's at 60, 61. So that's the other side of it. The other side of it is, well, wait a minute. You're breaking out. Maybe there's still more breakout to come. And I think that's not an unreasonable way to look at it, because you're not anywhere near 70. For me, 70 isn't a magic number in the sense that as soon as we get there, I'm a bear, right? Or I'm out of all my longs, but it's just not even close to being overbought on the daily. So that's why I think it's a tough call in a nutshell. And so if you want me to go on the record, I would go on the record just to stay bullish, because I saw nothing really bad happening with market breadth or sectors under the surface. There are problems, obviously, in terms of developments. Excuse me. There's problems out there with certain things that have been percolating. You just don't know when they're going to spill over. So we don't know when the CDS issue could spill over. We don't know when the silver situation turns into a bigger problem and has a domino effect on other markets or the financial system. Maybe, I don't know. Excuse me. So those are factors. I just don't know when they could break, and that could change everything, dramatically. You could also look at this sort of in a vacuum and say, well, this could be a double top, which you have to admit it could be the way it's shaping up. So right? You could say, well, hey, there's a problem down here. Look how there's declining volume as we rally. This isn't that impressive. You'd probably be right, but it's also hard to gauge that during a holiday week. This is not really a week that we could say, yes, it's pretty it's a fake out because it was a holiday. Maybe the holiday's helping it, but we know there's going to be less volume, right, as the week wears on because I honestly think they should on something as big as a Christmas holiday, they ought to just open for an hour and then close, and then the following day open for an hour and close. The rest of the time is it's just most of the time it's like today. We're all here, we're all prepared, but there's just the UOA, which normally gets on a decent day at least 30 entries in our elite log. I don't think well, last time I looked, we might have had 10. So that just gives you an idea. It's just that's how holiday-esque it is right now. So, and I don't blame people for not placing large UOA bets. There's just not a lot happening. I mean, business kind of goes to a somewhat of a standstill, and people pick up on deal making and appointments because they've got a lot of holiday-related obligations at this time of year and travel and so on and so forth. So it is what it is. I could make the case. I would have no problem. So let's just kind of end this. I would have no problem being a buyer if the market opens unched and starts rallying, right? I would have no problem being a buyer thinking that this thing can continue. At the same time, if you wanted to trade a few quick pullbacks, and I would just drop a line. This is you've all people that watch this video consistently. You know what I do. This is my way of getting aggressively short or long. I try to draw the most aggressive line to get myself in, and then I manage it. And that's probably going to be right below today's low. And then that's super aggressive. You haven't even cracked Wednesday's low, and but maybe that leads to another false breakout and a little pullback to the 20 SMA there in blue. Maybe. It's a little trade. It's all it is. It's nothing special. And then who knows if there's news driving it, it could turn into more certainly. You could really have a double top. But it's just really hard to argue against all these SMAs rising. Like I said, the breadth and the sectors are fine. It's again tough to get a read. So what can you really say? If we pull in the other major index ETFs, this is what they look like. And you're barely off the all-time highs over here in the diamonds. The Qs are still the one that's a little removed, but we all know what can happen with the Qs. I mean, right now it's been a nice week for the diamonds and Qs, and the Qs did make a new high here. But look, you have to look at it this way. I think these things are only about 2% away from an all-time high. So that is nothing for the Qs. Now that could literally happen in one day on really sort of energizing news. Diamonds, I'm sorry, IWM has sort of fallen off after a really nice run, so it's in consolidation mode. As of right now, it's doing something potentially important, which is to hold the rising 20 SMA there in blue. That's what you want to see it do. It's clinging to it. So this would turn out to be really a consolidation where you have this leg up, then you have this pullback, you consolidate a little bit after that initial swoon, you put in a higher low potentially if you do hold here, and then you're going, right? So you kind of keep the really good technicals intact, and you're probably going into attack mode on this high if you can keep this high lower than this low higher than this low, and you start to break out again and go with the other indices that look primed to do it. SPY, we already talked about it. You saw the new line that I just dropped in there on the larger chart. Yeah, you could short this. I'd have no problem doing that either as a trade if you're experienced. You just have to trade when you trade against the trend and assuming it's just sort of not very newsy and you're just like, okay, they're taking them down. I'm going to go along with this. Just be sure that you do keep it on a short leash because and have your rolling orders or trimming orders or closing orders out there because these quick drops inside of bull markets can be very quick where you get the worst price. So in other words, the best price for your puts to sell at. That can be very, very fleeting. So you want to have your orders and so on and so forth out there. But really, overall, this stuff looks pretty good. You're not very far away in 3 out of 4 from the all-time highs, and you're only about, well, we'll call it 3.5 to 4% here on IWM. So that's really not a bad look to wrap up the year if they're able to keep it here or higher. I think that's a win for them. But again, is that really enough? And I don't think it really is. That's why I'm saying there can be more because we don't do this every single week. But if you look at the weekly chart might be flashing an RSI, depending on what RSI you want to look at. I want the weekly here, and I don't know why I didn't bring this up. I want weekly, and I want SPY. It should be closer to overbought status, so-called overbought status. Let's see what it shows up at down here. Yeah, 65, 66. So it's getting towards the so-called overbought level, but it isn't there yet. But I think if you look at it here, right, that looks like it's the same thing, obviously, just consolidated on this versus daily. But that looks to me like, okay, dip, sort of double bottom-esque, come strongly out of that, push, hit former resistance, pull back briefly, reverse, and get ready to go. So to me, like this, if you were to say a weekly breakout is right there, it is. It's shaping up obviously the same way that we would expect it to. And so this wouldn't be crazy at all for this thing to put a few weeks of strong performance together if it breaks out, because it really isn't overbought even on the weekly chart. So not a prediction, just saying this is what how I'm reading it. And then let's look at our market breadth, and this is going to be kind of boring. There's nothing really great or really bad happening here, but things are just kind of sustaining. And if you're in a listless phase and things are not falling apart, that's not a bad thing, right? It's just sort of the market sort of churning a little bit, market maybe cooling off a little bit. They're not going bonkers under the surface with a lot of screaming new highs, this, that, and the other thing. There's nothing wrong, but they're just not really. This is usually right when you have like a major index, in this case a major index ETF, making new highs, and it's doing so in maybe like a dubious way where it's holiday-esque action and all that. People would say true, but there's really nothing bad happening here, is my point. There's nothing really bad yet that we can take from this and say, granted, there's other breadth factors we can look at. We look at these basic things most weeks. So this is what we're sticking with, but it is what it is. There's nothing really great or really bad, and so this I think will start to re-energize if we break out. People will be taking notes on the fact that look, we're going, and I'm going to start jumping into this now as a result. And that's just my sense on how the market typically operates. When it comes to these sectors, because this really won't be a long video today, there's no reason to belabor it much like last week. When you look at the sectors, one thing we did identify a while ago, which was the XLB, that really has performed now for a second week in a row. So I think this whole materials, commodities area might be one to continue to look at. Um, the industrials are just a stone's throw from, attacking their all-time high. Other things have hung in there, so discretionary and transport have still hung in there. The defensive sector's not doing much. Financials have been pretty strong, making new highs. Energy backed off, which might be a good thing for the consumer, and it's sort of stuck in the mud. And then your former leadership sectors are going again, right? They're working their way back up in the form of XLK and XLC. So to me, right, that is what you want to see, those leaders kind of getting their mojo back and working their way back towards highs with the possibility of attacking those highs maybe and then potentially breaking out. And that's where the whole megas discussion I think comes in nicely, because if we go back to, that should be behind here, we'll go back to the daily to take a look at these, and we're just going to do a quick snapshot on them. I'm not going to I'm going to not in my typical fashion, not try to belabor things. I don't really mean to do that, just the way my nature really is. But yeah, so let's take a look at that. We'll take a look at the ones I've listed for sure, AAPL, right? And so this to me, uh, this is really getting close. You could see it moved on Wednesday beyond resistance, that yeah, that pink line, and now it's working its way up. And a lot of you know the drill. I mean, I look at it like, okay, if it gets through here, my next major level would be there. If it gets through there, then it has to deal with these highs right in here at 280. If it gets through there, it's going to come up to the next line, probably, which would put it at about 283. If it gets through there, it's probably odds on to take a run at the all-time high. But the way that it's swinging back up after touching the 50, after a multi-week pullback, that means that this thing's rested. It's nowhere near overbought, and it's got plenty of room to go if it wants to. So I think it's looking like it's trying to curl again, is the point. Amazon is one we like this week. I think we talked about that last week in the video. Amazon did something similar to what we're talking about there with Apple. Amazon is now over all the SMAs. It fought its way through them. It's been a good week in there. I excuse me, I'm glad. I think we used that in this one of the services, so I'm glad that we did, because that's one of the stocks that did have a good start to the week and it's kind of held the gains nicely. And as of right now, I believe it's not very overbought as well. So that's got some more promise. I think it's just starting to get going on the weekly chart. So if it does start to break out of that consolidation and start lifting back up, obviously this is a really good sign for these index levels. That this will really help the index levels. Here's Google, another one that's been correcting now for some time, and all it really needs to do is take out this week's high. It's go back above all of the SMAs, as you can see, most of which are rising. So if they push through the highs in a market that's rallying, this does look like it's ticketed, right? It does look like it's ticketed to try to go back for more. I would put probably the first bigger level you're going to look at is right around that 320, just ballparking it at 320. So that's up 2%. And then beyond there just isn't much. And I like to see that, because not having resistance in the way can often give you those bigger moves where, hey, there's nothing that no overhang from the past. I can go, much like you did here, where it just really pushed because there was nothing in its way. It was making its way to a new all-time high. So I think that one, remember how large these are in terms of weighting, right? And Meta, right? It's been a little bit of a laggard after being a leader, and you could see that it's got the higher low, it's got the slightly higher high, or should say similar high here, and now it has this low in here after a similar high, and now, right, it just needs to take out the 200 in purple and then start to take out this and go. So, I mean, I think that's on the cusp and trying to shift more towards the bull side. If you lost the 20 there in blue, that might be a problem. But this, to me, also looks like it's trying to shift its way towards bull. It's kind of got a little mini cup and handle in it, that you can see right there too. So it's got an interesting pattern as well. So I think that looks somewhat interesting and possibly on the cusp. Microsoft, this is another one. Right? Remember, the market's been able to do what it's done with some of these big dogs getting knocked down and remaining down. And this one and the prior one show that, right? But this thing is very close to flipping, in my book, back towards more of a bullish posture, and it's working its way towards. I think it's got to really get through to start feeling definitely much better about it. I'd put it at about 493. So it's not too far away, but that's going to then, once it gets past there and closes above there, it should in a bull market it should be able to rise towards the 500 level, and then that's where the test comes in for, can it get through these SMAs? If it does, the rest, right? It's back on track, and there's no SMAs in the way. You're looking at fibs, you're looking at flat lines, but this to me is also just this is probably a little bit behind Meta in terms of things, but I think that's starting to look a little bit better. It's on the cusp of just needs to take one or two more steps and it will be really looking quite good. And that's a very large name. You all know about this one. I'm pretty sure we talked about this as a possible bull last week. We did use this week as I believe we use this as one of our names, if not the main name in our momentum service, which is Rebel Pit Pro and Rebel Pit Elite. And so I think this is what we settled on, or at least it made it in there, I think. And this one obviously is doing quite well this week. And that really had sort of a similar situation where similar lows started coming back up really close to resistance. You can see my resistance line in pink, gets through, goes now back above all SMAs. A big leadership name, obviously. You get that thing rumbling, that leads to a lot of other things being keyed off of. Tesla, we've been bullish about. It did put a nice move together, but since making that new all-time high, I believe on Monday, it's had three sessions of pullback. And if you look at it, it looks kind of rough. Like, what are you doing? Okay, remember though, this is a holiday week. Remember that this pullback this year, especially the pullback after a new high, all-time high, has been very commonplace. But you have these rising SMAs pretty much across the board. Everything's stacked in slope where your shortest is above the next longest, which is above the next longest, and so on. So everything's kind of righted there. Just needs to hold here or close to here and start to go again. And that would be a nice, almost like consolidate your way, right? Make a new time high, all-time high here on this strong candle. Hold on to it for a while. He held on to the gains. People that bought the breakout are getting frustrated. And then if you can re-energize and go, you're arrested and you could really start tacking it on. So I think this still looks really good. It just needs to get a little bit of short-term mojo back. And I think it probably at that point, extends this rally, this breakout, if it can get that mojo back. Right now, doesn't look like it's really putting in a great effort to do that. But I'm fairly sure that's the all-time high. Yeah, it is. That's the all-time high. So yeah, a big picture view of it. I mean, to me, it looks very promising as well. So that look at all these. All I'm saying is like these. It would take something. It would take something. I think important happening to derail these. Now, this is obviously counter trend, but this thing's been flatlining here for a while. Apparently, they like it near 90. So under the surface, this is sort of strengthening on your readings here with momentum. So all this really again needs is another one that just needs to start to pop and go. And getting through that declining 20 and holding would be a big deal. But that would be a decent little ride of a few dollars that you could make a little money on if you're trading short term. But getting through there probably opens the door back up to the former recent lows that are above 100. So getting through that 20 is a bigger deal. That's certainly the bigger deal. But yeah, I mean, that's sort of shelving. It's just putting a little shelf together there, and that could also start to lift. It's counter trend, so it should be handled accordingly. But it looks to me like it wants to round up more than it wants to roll over at this moment in time. So that could start joining the party, which is another large weight. And then we did talk about, I believe, financials looking good lately. Um, Morgan breaks out to a new all-time high, even made one today, has subsequently reversed. That's the whole tough call about this week because would it really be crazy to suggest that you pull back down a couple of percent first before trying to go again? We've seen it happen so many times. It happens over the years, sure. It's happened over the years, but in 2025, it happened a lot in the SPY and Qs, but it can certainly have obviously happen here. But this is acting well. I mean, these charts look good. Now, the biggest problem that this chart has is that on some very large big picture views, it's overbought, but that can stay that way for a very long time. And the other sort of daily charts look not really that overbought, right? You're only at 63. So could you get a little mild pullback, hold and go? If you did, I would be more inclined to be a buyer, given the trend and how well it's all holding together. Excuse me. So with that being the case, I think a lot of those megas, as you can see, I think a lot of the technicals sort of favor maybe a little bit of a pullback here or there that's brief as of right now, and then a resumption. So that's why I'm kind of saying maybe this year you combine that with the sort of lackluster fall, sort of sideways, just spiders action that we've had that took us out of the strong trending channel, took us out of the strong trending mode we were in, and then you start to get uh you start getting this breakout now. I mean, this is really just what the doctor ordered at just the right time. You've got a couple of patterns that suggest it should fire higher, that they often do come after stocks and start driving them up in the new year when they start placing bets. Maybe a lot of these megas will actually be seen as good values for a change, not high valuations. They may still be on someone's on someone's work. They may still be overvalued. Excuse me. Of course, but I mean relative to where they were, they're much less overvalued in the sense that technically a lot of them have been knocked down quite a bit. So sort of technically undervalued, if you will, relative to where they were. So, in some people's eyes, they should represent really great buying opportunities, and they very well may be too. It's not as if that's a crazy notion, the way that these things have performed over the years. But this is a weekly chart on Meta, and you can see it's well removed from the all-time high. It's still over $100+ away from the all-time high. So on the bigger picture charts of the weekly. So you could see, right? That's what I mean in terms of value. We'll just do one more that way. And even Microsoft is off significantly, right? More than 10% from the highest high. And it was lower. So that's pretty good, right? Where you're, oh yeah, I'm getting a deal to get in. So that's what could ignite. I'm just kind of mentioning that because I know there's been some talk about how when we get into the new year, there's going to be a lot of selling. I can't say that's wrong yet. Well, only time will tell. I just usually, my recollection on that is that you usually see that when the market's really screamed in December into year end and it really tacks on to an already strong year. And people don't want to sell and they're just like, wow, why should I? It's working well. It's working so well. Why should I sell? So once they get that chance to sell in January and extend their tax consequences out in time, they do because they feel like it was overdone. And I don't feel like this. I feel like this market is somewhat the opposite, not the complete opposite, but somewhat the opposite of that. That's just my take on it. So that's where I am on it. I think it's looking more positive. I think it's, excuse me, going to take serious news to develop. And I won't say that there aren't things out there, but the VIX right now is not sniffing anything out. You would expect the VIX to act like this at this time of the year. This is what often happens where you get beaten down. People don't want to hold volatility. They don't even want to be in the market, trade the market. Everyone takes their time off because most people are smart enough to do that, unlike me. But yeah, uh, you get these listless trading sessions that you wonder what you sat there and looked around for because really there's hardly anything developing. And when something does, it doesn't sustain. So it's sort of, it's just not what you want to, not your ideal trading conditions, put it that way. On the other side of that, though, is something like this, which is the SLV. And you can see that this ETF has developed problems of its own. If you've been tracking it with Ryan, who's done a great job of covering it, all the different developments in there and how there could be physical shortages and these exchanges are at risk because they might not have what they need to deliver because people are insisting on physical delivery on some of these things that happen. And so people that are managing the futures and managing other things are potentially really going to struggle. It could create all kinds of spillover domino effect type things that could be a real problem. I have no idea. I can obviously the big picture story is very easy to comprehend whether or not it's that close and this is real. It seems like it is, but again, I have a hard time believing anything with all the lying that's going on. in the world in this country. It just seems like it gets worse and worse and worse all the time. Just misleading things and lies. But this is obviously following through on a technical pattern we liked a long time ago. But this is starting to get a little bit on the parabolic side. I think the standard deviation stretch now is pretty extraordinary. So I don't know if this is a great entry point here. It might be a little late in the game in the short run. You might need to have something more like this happen again after this. But at the same time, right, it's not over yet, and who knows if the shortage is real, if there's a panic or scramble, it could keep going. It could. I happen to think it's overdone in a significant way. Doesn't mean anything. If you wanted to trade it, I have that set to three standard deviations away from my long-term moving average, and it's still beyond that. And that's normally a really good sign. But this could be a very special situation. So I'm not bringing it up to equivocate. I'm just saying this could create problems. Again, there's always it seems like there's always something. That's probably why you have to always stick with your discipline, or nearly always have to stick with your discipline. But XAU lagging behind the gold silver index, and the GLD lagging behind SLV. Because and SLV is lagged behind silver's lagged behind gold for so long that's not a surprise, I'm sure, to a lot of people, myself included, that silver's really starting to outperform. That was the expectation based on the fact that the relationship was really stretched in one direction and needed to revert. But anyway, that's one area that could cause problems. There's um, I guess there's the debt insurance discussion we've had in different webinars. Ryan's been talking about for quite some time. That could be a problem. Other things could be a problem. I know there's been some banking things that have also kind of come across folks' radar. But overall, I'm just going with news neutral. I just continue to favor that they try to extend this a little bit. You have to be on guard based on where you are. You always have to do that on any breakout, especially in 2025, which we're technically still in, because they have had these insta fades where you make the new high and then you fade back quickly. Even this one here, when you almost hit a new high, right, and finally got there, that faded quickly. So they've done a great job of frustrating the breakout buyers this year. You've got to find a way to start pulling the trigger earlier, obviously, than waiting for the big breakout areas that a lot of people, in other words, do all-time highs. There are people that really espouse that, by the way, that espouse that this is what I do. I just start buying when things are making new all-time highs. If its stock makes a new all-time high, I want to buy it because there's usually good reasons why it's being driven there. If it's a legitimate company. I think there's some truth to that. It's just that I think for trading, my experience has been for trading, there's some eras that lent themselves to that better than others. And this one so far in 2025 hasn't been great for that. It was better, I think, in 24 and 23, but still, you're always on guard when you're trading a breakout because not every breakout is successful. Many breakouts fail. That's clear, right? So you've got to keep your discipline about you. And if it's not holding your breakout level and not acting well, you either hedge or you get out and then you set an alert, get ready to possibly go back in if the market starts getting its footing again and starts looking like it's ready to continue on in the bull mode. But that's about it for now. I think barring bad news, it's a tough call, and you could twist my arm and say, well, don't you think there's a little mild pullback? I'd say, yeah, I can see that. Like I said earlier in this video, at the same time, it's not overbought, and I think they're probably going to want to keep this something somewhere near here if they can. Maybe not, if not extend it a little bit because it's not overdone. And so that also wouldn't surprise me, and you could twist my arm into that fairly easily. So I'm going to say I'm going to come in with the trend. I'm going to come in with the fact that they've tried to keep things buoyed near holidays, and they're not too toasty yet. I think they're going to try to push it, early on. And then let's see, but I kind of, as of now, I would expect another holiday week. Unfortunately, I've got to go with my all the years of being in the market, and just these weeks are not good. I typically take off. I don't haven't done that in a decade or so, unfortunately, but for different reasons. But yeah, I would typically take off during this time if I was scheduling scheduling anything like that. It's easier times for the crew to cover for you and help out and all so on and so forth because it's just slow, and that's just and there's just not as much percolating. So I'm going to wrap it up on that note, and I'm going to say that I do hope this week that you got something out of the video that can help you in the upcoming week or some week in the future. And I want to wish everyone a great conclusion to the trading year, a great start to the new year, a very happy new year, a good conclusion, great conclusion, and safe conclusion to the holiday season, and so on and so forth. And thank you everyone for tuning in. Everyone take care, and we'll be in touch next week.